The unemployment rate tumbles, the Reserve Bank says it will end its bond buying program, and a disappointing bottom line for the budget. The economy is the main story this morning. Also today, New South Wales announces a record number of COVID cases, Qantas outlines big losses but at least everyone's back at work, and ANZ's shareholders show their displeasure. It's Friday the 17th of December 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
Then stay listening for Sean's chat to Carlos Cacho, the chief economist of Jarden Group, about yesterday's huge day for the economy. But really, Sean, where do we actually start when it comes to talking about the economy? The federal government updated its budget yesterday, the unemployment rate fell, and the Reserve Bank says it's going to start tightening monetary policy. Quite a day.
Sure was. Now, let's start with the federal government's updated budget forecast. There's plenty in the half-year update, but here are some of the key points. The budget bottom line will improve by about $2.3 billion over the next 4 years. Not very much, really. Pretty disappointing all in all. It will actually worsen beyond that 3, 4, 5, 6, 7 years out. One of the big cost blowouts is the National Disability Insurance Scheme. That's a worry for the economy. Wages and inflation are forecast to grow more than the government expected 6 months ago, and the labour market is expected to improve significantly. In fact, it already has. More of that in a moment. There's about $16 billion in the budget squirreled away for future spending, aka election spending. That's how much you can expect both the government and opposition to be handing out in the lead up to the election. Economic growth has been revised down this year due to the Omicron variant outbreak, but it's tipped to rise next year. So I'd call that a reasonable set of numbers. It's a pre-election set of numbers. Next was the Bureau of Statistics employment data. Australia added an incredible 336,100 jobs in November, much better than expected, and enough to send the unemployment rate down to 4.6%. The ending of lockdowns underpinned the surge, and the all-important participation rate jumped from 64.7% in October to 66.1% in November. That's almost back to pre-COVID levels. Part-time jobs, which were hardest hit by lockdowns obviously, rebounded strongly with 238,000 positions created during the month. Hours worked were higher and are nearly back to pre-COVID levels. This was an incredibly strong set of numbers.
Yeah, huge day. And the Reserve Bank Governor, Philip Lowe, said the central bank's bond buying program, which has been used to keep short-term interest rates low, may be wound back at the next board meeting in February and then finish in May.
Yes, and once that's done, the next step in tightening of monetary policy is to start lifting interest rates. But that's not a foregone conclusion by any stretch. Dr. Lowe said the emergence of the Omicron variant had increased risks that the economy wouldn't perform as well as expected. But overall, he expected the momentum in the economy currently would continue in coming months. He said he expected the overnight cash rate, which is the key determinant of variable interest rates, would remain at a record low until at least 2023. Note that the time frame, though, has gone from 2024 to 2023. That's significant. So, Michael, we end the week and almost the year knowing that consumer and business confidence is really good. The jobs market is strong. The federal budget is improving. The Reserve Bank is going to stop trying to control short-term bond yields early next year. The big unknown, of course, is the impact of the Omicron variant, but the consensus view is it won't derail the economy. I reckon if the government and the Reserve Bank were offered that at the beginning of 2021, they would have taken it.
Yeah, I reckon you might be right there. So how did markets perform yesterday?
Well, all the economics pretty much dominated proceedings. By the end of the day, the S&P ASX 200 closed down 0.4% to 7,276 points. Technology stocks did pretty well. Healthcare stocks were dumped. More of that in a moment.
And what happened in overseas markets?
Well, Michael, the fallout from the Federal Reserve's decision yesterday morning to end bond buying quicker and pencil in 3 interest rate rises next year hit most markets. Fed Chair Jerome Powell signalled that inflation is now the number one enemy to economic expansion. While markets initially jumped, the reality of higher interest rates hit home overnight, and Wall Street fell, led lower by the tech sector. European markets rose as the region's central bank announced a gradual pullback of pandemic stimulus, though the head of the European Central Bank, Christine Lagarde, said it was unlikely that interest rates would rise next year. In contrast, the Bank of England overnight unexpectedly raised interest rates on the back of rising inflation. The Aussie dollar this morning is trading at just under 72 US cents. Oil is higher with a barrel of Brent crude worth 75 US dollars a barrel, and gold is trading at just under 1,800 US dollars an ounce.
Okay, we'll be back in a moment with the rest of the day's business news. Sean, plenty of stories around this morning. Let's start with COVID. Big numbers in New South Wales and Victoria again.
Yes, New South Wales broke its peak Delta coronavirus record yesterday, reporting 1,742 new cases. The number came on the second day of reduced restrictions in that state, so it's likely to get much, much higher. Fortunately, the number of people hospitalised remains low at 192, but that will also climb because typically there's a 10-day lag between reporting the infection rate and the need for hospitalisation. The state's effective reproduction rate is now over 2. Which means every person infected will pass it on to 2 others. Victoria recorded 1,622 new local cases yesterday and 9 deaths. 366 people are in hospital in that state. Queensland reported 18 new cases and the ACT 11 cases.
Okay. Now, Qantas said it's heading for an underlying loss of $250 to $300 million for the 6 months to December.
It did. Qantas provided a trading update yesterday. There was good news, Michael, and there was bad news. A good way of measuring the result is to see how the group's share price responded, and it was pretty much in line with the rest of the market. So that means the good news and the bad news pretty much balanced out. Some of the good news first. All Australian-based employees are now back at work. Domestic capacity will be back to pre-COVID levels in the second half of next year. The airline sold land at its headquarters in Mascot in Sydney, and that's boosted cash on hand, and the loyalty and freight businesses are doing really well. The not-so-good news, international capacity will take until at least 2023 to get back to normal levels. The group still owes about $5.7 billion. None of that's real good. Qantas also said it would buy 40 new aircraft in the next 6 months from the Airbus A320neo and A220 families.
Now, CEO Alan Joyce was out speaking about all of this. What did he have to say?
He said the December half is among the worst of the COVID-impacted 6-month periods. Structural changes put in place last year have helped. Mr. Joyce said the Omicron variant had impacted international travel and there's been a large number of cancellations. Overall, though, he was fairly upbeat, though I'm not sure I've ever seen Alan Joyce be anything but upbeat.
Yeah, I think that's right. Now, ANZ's board and management faced shareholders yesterday, and that seems to be the trend with the banks at the moment. Shareholders weren't happy.
That's right. At ANZ, shareholders are upset about the fact the bank pretty much missed the housing boom, at least in terms of growing its mortgage book, and that's how banks make money. But as Chair Paul O'Sullivan pointed out, it was the only one of the big 4 banks to reduce costs last financial year, and it actually increased profit margins. Among the criticisms of ANZ is the time it takes to turn around a home loan, about 50 days. Mr. O'Sullivan said ANZ was often dealing with small business owners, and that took more time. The bank's share price has risen around 18% over the past year, better than the market, and about in line with Commonwealth Bank and National Australia Bank, much better than Westpac. Still, shareholders aren't so happy.
Now, Sean, I realised that I really made a bit of a fool of myself probably last week when I said I reckon the deal frenzy is behind us now for the year because we can't get through the day now without a takeover story.
That's so true, isn't it? Nickel and copper miner IGO will purchase nickel producer Western Metals in an all-cash takeover worth around $1.1 billion. That's a 35% premium to Western Metals' share price back in August. That was ahead of the initial offer from IGO. It's a takeover that went very quiet, and in mid-November, both sides told their respective annual general meetings there wasn't much to report. But an all-cash bid seems to have done the trick. So, Michael, let's recap this week, the week where we didn't think much was going to happen. CSL bid $16.4 billion for Swiss-based Vifa Pharma. Private equity group BGH Capital bid for fertility service provider Virtus Health. Corporate Travel Management announced the acquisition of Hello World's corporate travel segment. And wealth management firm Crestone Wealth will be sold for $475 million to a global private banking group backed by the royal family of Liechtenstein. Then we have the IGO Western Metals deal. And, of course, Afterpay shareholders voted for the acquisition by Block, formerly known as Square. That one's worth about $39 billion. Pretty solid week ahead of the holiday season, I'd say.
Yeah, I think that sounds about right. And it also tells me I should stop making predictions about market activity. Okay, Sean, what's making headlines in today's news media?
The Australian is reporting this morning that Victorian Premier Daniel Andrews has been forced into isolation after coming into contact with a positive case of COVID-19 last weekend. Mr. Andrews has taken a PCR test and apparently is awaiting his results. The same outlet is also reporting that Australia and the UK will sign a historic free trade agreement this morning in a deal that will abolish tariffs on 99% of goods worth almost $10 billion. And as you could imagine, much of the overseas news is based around the surging number of COVID cases. Reuters reports that the number of cases recorded in the UK overnight was more than 88,000, a new record. In the United States, new cases topped 143,000.
Running through some of the other stories around today, and this one has to be my favourite story of the week, Sean. Caroline Kennedy, the daughter of former President John F. Kennedy and Jackie Kennedy Onassis, has been nominated as the US ambassador to Australia. It's really a touch of American royalty coming down under, and pretty much everyone locally welcomed the nomination yesterday. Ms. Kennedy was actually ambassador to Japan under the Obama administration, so she's certainly experienced in this area.
The Australian Competition and Consumer Commission said it won't oppose Woodside's acquisition of BHP Petroleum, saying it had no competition concerns. Gas supply to Western Australia was a main worry because the deal will combine two of the four largest suppliers to the state. The ACCC tick opens the way for the deal to go ahead.
Now, Treasury Wine Estates, Sean, says it has reconfigured $1.4 billion of its bank debt. What's interesting about this is that it's going to get a lower interest rate from three major banks if it meets its environmental, water and gender equity targets. Is this a taste of things to come, do you reckon?
I think so. I think we're going to see a lot more of that in 2022. PointsBet has launched operations in the US state of Virginia and is now in 8 states. PointsBet share price was up 3.5% yesterday. It's been a crazy ride for that group. Its share price bottomed in March last year at around $1.26, then peaked early this year at $17.60 and finished yesterday around $7.16.
That's quite a ride, isn't it?
Sure is.
And Sean, recycling group Sims has acquired Baltimore-based metals recycler Atlantic Recycling Group for $52 million. It continues Sims' push into the world's largest economy, and it now has operations along much of the East Coast. Okay, what's the key overseas news this morning?
Huawei was involved in creating mass surveillance programs for Beijing and offered to produce technology that would enable the authorities to monitor the forced re-education of ethnic minorities, according to the Washington Post. The newspaper claimed that Huawei co-developed surveillance systems and pitched them with marketing materials bearing the company logo. Of course, Huawei was blocked from new 5G telecom networks in several countries, including Australia. And a Supreme Court ruling in the United Kingdom means passport officials cannot be obliged to offer gender-neutral documents, officially ending a 25-year campaign. The court rejected a claim that would allow a third category of X, that's neither male nor female, on passports.
Okay, now up next, Sean, is the Daily Interview, and today you're speaking to Carlos Cacho from Jarden Group, a very good guide to everything that's happened in the last 24 hours.
Yes, we run through everything from employment numbers to budget to Philip Lowe from the Reserve Bank. If you're interested in the economy, make sure you listen.
Yeah, Carlos does a fantastic job of explaining what it all means. That's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. Thank you very much, Sean.
Thank you, Michael.
It's Friday, the 17th of December 2021. Make sure you follow the podcast and join us online on LinkedIn, Twitter and Facebook. I'm Michael Thompson, and that was Fear and Greed. Have a great day.